Hello viewers, in this video I'll be going over the S&P 500 ETF ticker symbol SPY. Today we are down 84 basis points and we have about 1 hour left in trading. On the 1 hour chart, we just got off of oversold RSI, and on the 4 hour chart we also are at oversold RSI as well. On the daily chart, we are at support on the 50-day moving average. If we were to close above that or remain above the 50-day moving average, or at least have this candle wick in shape by the end of closing day, I would say we may have a rebound soon. And at the moment, I do see a resistance shaping. If we were to reverse the 9-day and 18-day moving averages right there at the price of $298.90. And for support, if we do continue to break down lower, I do see the 100-day moving average right here, and that coincides with past support back here in early June or June 11th right there. That support coincides with the moving average and support back in June. So if we were to move on higher, that price movement is roughly around, I would say, right about 2.3%. And if we were to continue to move lower, that price movement is around 82 basis points. So let's head to the forecast model. So on here, I'll go day by day where the S&P 500 will head to in next coming days. So we have 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, 7 days out. So which one of these forecasts we should focus on? It is this trend right here. Reason why this trend coincides or is the best match to the current trend right here. And this trend dates back to September 19, 2013 to December 13, 2013. I'll point out why these two trends are similar. So what we have in the beginning of the trend, we have a downward channel, and then we immediately made a reversal to head on higher right here. And as you notice, it remained above the middle Bollinger Band, and then we proceeded to break down and touch the bottom Bollinger Band immediately. Right there, and below here we start to see the similar pattern and characteristics, down channel in the beginning of the trend, and then we proceeded to move on higher, respecting the middle Bollinger Band, never dipping below it, and then finally it gave way and broke through and touched the bottom Bollinger Band. So what we have is 1, 2, 3 points, 1, 2, 3 points. So there's reason to believe that the trends and patterns are the same. The forecasts and outcome should be the same. So again, the trend that we took a look at was September 19th, 2013 to December 13, 2013. So back then, the S&P 500 was up roughly 2.7% in the next coming days. And here's the line trend that I compared it to. So we have the current trend right here and the 2013 trend overlapping it. So that is all. If you enjoy this content, feel free to like, subscribe, comment, and thank you for watching.